One Paul here. Today I'm going to teach you guys basically how to use Fibonacci, and I'm going to be going over Fibonacci for a couple videos. Today we're going to be looking at crypto, and I'm going to teach you how to do this and how to load up your Fibonacci on a longer time frame and use it to find some really good levels to focus on. This strategy is very helpful because whether you're trading crypto or whether you want to find good points to dollar cost average, this is a good strategy to find. If you do this correctly, and especially you do it like on the daily chart, and you put out your Fibonacci, you can find the good dollar cost average moments. Basically, anything that falls into the red zone or the bottom of the Fibonacci is a pretty good buying zone, but it actually helps. You can call out a lot of good moves, and I use this to actually buy some crypto the other day. So it's a good indicator to have to actually find bottoms and where you can go and where you can bounce from. So I'm going to show you how to do this on a longer time frame. We're going to do crypto today, and I'll also be going over a couple other assets using this strategy. Okay, so I'm going to teach you how to apply the Fibonacci, and you could do this at any time frame you want. But first, we're going to, for the best results, I believe, by doing this on the daily and kind of scaling down. Now, if you do this on the daily, most of these things, you're not going to find a signal every day. So if you want to find intraday results, you'll have to do this on the hour or the 15-minute. But real quickly, I'm going to show you how to do this on the daily. And the first thing you want to do is you want to load up your daily, and then you want to go to your Fibonacci retracement. And then you want to find, now it depends on the direction. If you're in a bullish moment, you want to go from the top to the bottom. If you're in a bearish moment, you want to go from the bottom to the top. So I'll give you both examples here. So we were still in a bullish movement here, even though we've been going down for a few days. We're still bullish. So you want to go from the top wick to the bottom wick, and you want to go all the way down here, and that's your Fibonacci. So real quickly, if this was a bearish moment, you would want to go from the bottom to the top. So this is for when we're in a bear market, basically. But we're not, because we're not going to dump. We're not going to dump all this way. So this is only for when we're in a bearish moment. So right now you want to focus on the other way, and that's doing it from the top down. That's for bullish. So you want to go from your top to your bottom and walk that up. So what you want to do is you want to look at this, and you can clearly see good points now, depending on what you want to do. Whether you want to just find the best moments to buy in to dollar cost average, or finding bouncing zones. So what we can see right here is, we zoom in, we can see that there is a support line right here at 104, which basically means the price will most likely bounce back up from 104. So it gets closer to that number, you might find a bounce zone. So that would be a good point to get in for it, since we are still in a bullish momentum. You can catch a bump back up, because you can see right now, if you just study this on the daily, it is in a range. It's basically been in a range for a little bit. It's been in a range for about 22 days, so we can see that it is right now ranging between 105, let's see, it's ranging between 112,000 and 104,000. So it's in that range. So you know exactly when to put your buy orders in. Now, if it breaks this, it'll go down further. So the next time for it to catch a bounce would be the next level, which will be this one right here. So if it ends up breaking this 104,000, if it ends up breaking 104,000, the next level of support would be right here. So this level right here would be your next bounce zone. So this is just looking at it on the daily. So if you want to do this on a intraday level, you can still do that. So you just want to go to your hour. If you want to get results on the day. Now, on the days, you want to do the same thing. We're still in a bullish momentum here. So you want to load up your Fibonacci. And again, you want to go from your top moment to the bottom of it. And you want to make sure you lock it. So what we can tell right here is we're still in a bullish moment. We could catch a bounce right here at 104, and I think that was the same number we were looking at. We were looking at it on the daily. If it does not hold this support line, it could possibly come down to this red zone all the way to the bottom, which will be at 102. So if this line does not hold, then it will drop down more, and it will drop down to 102, which I don't see happening. Most likely it's going to get close to this support line and start doing a little bounce back up, and then it's going to try and get past here and just keep going up and up. So from here it'll probably start bouncing. That's my own personal opinion. So for intraday results, what you want to do is you want to get in close to this number and write it back up. And you use your support line to find those bounce zones. So basically you could get in, you enter trades, you enter your buy orders right about here. And then if it can't get past this line, this will be resistance, and if it can't get past this line, it'll probably come back down. That's looking at this on a intraday level. But real quickly, let's just do this. Let's just do this on a minute, and I want to show you guys how this looks on a minute chart. Now, I don't recommend doing this on a minute chart, but it will give you guys a general idea of how this works. Now, do not do this on a minute chart. I'm just showing you guys because the candles are moving and it's a lot easier to see. But let's just load the Fibonacci here real quick on the minute chart. So we see our highest point right here and our lowest point down here. So what we can see from the minute chart. Okay, so on a minute chart we see there is resistance right here at 105, and then there's a bounce zone right here at 10. Yeah, this is mainly for scalp. So look at this area. If you were to do any moves, there's not a lot of movement. There's not a lot you can do in that range, even if you did find any moves, because this isn't a big move here. Even if you did catch a little brief bounce, this isn't a big move. Let's real quickly just look at this on let's do a 15 minute. let's look at this on a 15-minute. So we want to go to the highest point, to the lowest point. And we can see right now on the 15-minute, we are bouncing pretty much on the bottom here. So we could wait for it to come down here and just ride it back up, because unless it breaks this level, unless it breaks this right here, you could expect a bounce back up. So we could see a bounce around 104, which I've probably been saying in a couple time frames. If you look at it, we could see that 104 is a pretty good bounce zone. So that's how you use the Fibonacci. Now that's for trading. Now you can also use this for dollar cost averaging. So you can go to your favorite cryptos. You can go to, let's just say, well, I called one out the other day, which was, which one did I call out? I think I called out, I called out Shiba. I called out Shiba in my Discord using the Fibonacci. And I'll show you how I did it. So I'm going to remove that. So what I basically did is I did the same thing. I took the Fibonacci, took the highest point to the lowest point, and it was yesterday. Now yesterday Shiba was in that red zone. It was in that red zone, and I called it out on my Discord. And I said, anything in that red zone is a good buy zone. If you do this, especially if you do this on the daily and you see something going into the red zone, that is a good dollar cost average moment. And I basically saw that and I bought some Shiba. This candle was more into the red zone here yesterday, and I bought some Shiba. So if you're seeing that any asset is in the red zone, that is a good dollar cost average moment. So that's another way of using this technique to, you can use it to dollar cost average. You can use it to find the bottoms of a lot of assets, and you could use it to trade. But anyway, that's how you really use the Fibonacci